In today's video, you're going to learn exactly how to find the daily bias and trade with the larger participants. Now, what do I mean by the larger participants? I mean the participants that are focused on what's happening on the higher time frames, such as your daily and your weekly. First things first is you want to have context of the market. Now, let's break down this chart and see what we can find here. What do we notice? We have this massive fair value gap here on the daily, right? So now that we've identified this bearish fair value gap, what else do we notice is happening? Okay, well, we also have this breaker block as well here, right? Now that we have this bearish fair value gap also paired with this breaker block, what do we need to see in order to get confirmation that price is looking to expand back towards the downside? With this close that we have here, with this current daily candle, this gives us confirmation that we are now going to see more downside here on NQ. Now, the reason for that is notice we have this bearish fair value gap, which we displaced down through, and then we form a bullish fair value gap. Now, with this bullish fair value gap, notice what do we see here? This fair value gap gets mitigated. And because of that, that is now giving us confirmation going into the following day that we are likely going to see more downside. So if you are taking a trade that is targeting sell side liquidity, you want to hold this trade. Now that we've identified that the bullish fair value gap on the daily time frame got mitigated, we need to mark out our sell side liquidity targets. So we have previous day's low here. Next, we have more sell side down here. And we have more sell side down here. Now that we've identified our daily sell side liquidity targets, let's go down to the hourly time frame so we can get a better entry to actually target these lows. This way, we can maximize our profits and start making more consistent five-figure days. So as we see right now, we don't really have a setup, and now we finally have a setup. Looking at this setup, I see an equilibrium block. Based on that, this is where I want to be short from. Obviously, if you're watching it in real time, it is going to go a lot slower, but ideally, this is where we want to be entering the trade. Not only that, but we also got a change in state of delivery right up here at this 21,703 level. So let's mark that out as well. So now that we have a change in state of delivery and also an equilibrium block, we now have a setup that is tailored towards the downside and sell side liquidity. And because we already know that the daily bias is bearish because we inverted a bullish fair value gap, we understand that, hey, price is going to seek this sell side that we have here, ultimately previous day's low, the other daily sell side, and then our last sell side liquidity is almost 400 points away. Because of this, we know that typical 400, $500 that you make on your trades, this trade is actually going to pay out a lot more. Let's go ahead and mark this out. Price should not come back up to these highs. So let's go ahead and put our stop loss here. We can put PT1 here. And if PT1 gets hit, likely PT2 is going to get hit as well. Let's see how price wants to play out here. Notice what happens. We get that instant expansion down. Not only that, but price is likely going to head to our next sell side liquidity target as well. Notice how our final TP gets hit here. And this is because we are trading with the daily bias. Now let's go into another example. Based on what you see here, do you think this sell side liquidity will get taken? Or do you think this buy side liquidity up here will get taken first? Now, if you said buy side, you are 100% correct. Now let's break it down. What do we notice? We have a bearish fair value gap here, right? Notice how this bearish fair value gap gets inversed. So because of that, we are likely looking to seek buy side liquidity. Not only that, but notice how price sweeps these relative equal lows that we have here, right? So price takes these relative equal lows and we fail to displace below that level, ultimately meaning we took out a group of participants once we took the sell side liquidity down here, and likely the market is now looking to seek buy side. Now let's go down to the lower time frames so we can find a setup that can actually take us to this buy side liquidity and we capitalize on over 300, 400 points, which ultimately translates into over $6,000. So at this given point in time, what do we notice? Price came back to that fair value gap that we inversed on the daily. However, if you look at the hourly is currently supporting bearish price action. So because of that, we do not want to get in until we see a change in state of delivery. Our first sign of a change in state of delivery to the upside would actually be a close above this high here. So let's label that out. Next, we have to wait patiently for the actual change in state of delivery to occur. There we go. Now that we finally have the change in state of delivery, now it's up for us to find a setup that can actually take us to this daily buy side liquidity. One thing I see here is an equilibrium block. Not only that, but I also see this fair value gap also paired with this inverse equilibrium block down here. So me personally, I will look to enter the setup right around this price range here, and then look to target our daily buy side up top here with the stop loss below this range here. Now let's play this out. Remember, you want price to come back to you, come back to your entry. You never want to just chase price. It's not worth it. And just like that, notice where we get tagged in. We get tagged in at the inverse equilibrium block here. Now let's see if price wants to go up and take out our buy side liquidity. And just like that, notice how TP is hit. If you found this video useful, make sure to smash that like button, comment what you guys would like to learn next, subscribe, and I'll see you guys in my next one.